plants deserve more than a chemical diet. Give them the natural power of nature's living soil, packed with organic amendments and living microbes that feed the soil and fuel growth from the roots up. Stronger plants, bigger yields, better results. Shop natureslivingsoil.com and use code WWPGEN10 to get 10% off today. Nature's Living Soil. Feed the soil. Watch life flourish.
Good day, and welcome to WWP Genetics. We're thrilled that you have joined us for another engaging and educational video. Today, I will be discussing how a Trump executive order could change cannabis insurance forever. Today, we are exploring one of the most surprising developments in the cannabis industry, and it has nothing to do with dispensaries, legalization votes, or federal raids. This time, the story centers on insurance, banking, and a new executive order from President Trump that could reshape how cannabis businesses operate around the United States. This order has fast-tracked the reclassification of marijuana, and according to a new report, it may finally push the cannabis insurance market towards a long-awaited stability. For many cannabis-related businesses, finding affordable and reliable insurance has been one of the biggest barriers to a long-term stability. Coverage is limited, premiums are high, and many large insurance companies refuse to participate at all. This has forced cannabis operators into a risky and expensive insurance marketplace. In this video, we will break down exactly what this executive order does and what it does not do, and why it matters for cannabis businesses, insurance companies, banks, and investors. We will also explain how federal drug scheduling affects taxes, insurance risk, and financial access, and why this single policy shift could save the industry hundreds of millions of dollars. To understand why this executive order matters, we first need to understand the current insurance environment for cannabis businesses. Even though marijuana is legal in many U.S. states, it is still classified as illegal under federal law. For decades, marijuana has been listed as a Schedule I drug. Schedule I drugs are defined as substances with no accepted medical use and a high potential for abuse. This federal classification creates a serious conflict. State governments may allow cannabis sales, but federal law still treats marijuana as illegal. Insurance companies operate under federal regulations, which makes them cautious about covering businesses tied to federal illegal activities. As a result, most large national insurance carriers stay away from cannabis entirely. They worry about legal uncertainty, regulatory risk, and the possibility of sudden changes in federal enforcement. Because of this, cannabis businesses often rely on specialized insurance providers. These insurers are willing to take higher risks, but they charge higher premiums and offer less standardized coverage. Cannabis businesses are often seen as high risk for several reasons. Many operations are cash-heavy because traditional banking access is limited. Cash-heavy businesses are more vulnerable to theft, fraud, and crime. Cannabis inventory is also high value and easy to steal. On top of that, product liability claims are rising. Issues such as contamination, improper labeling, or inaccurate potency levels can result in lawsuits, recalls, and major financial losses. All of these factors make cannabis insurance expensive, complex, and difficult to obtain. When businesses have access to banks, loans, and insurance, they become more stable. They maintain better records, operate with less cash, and reduce the risk associated with theft and fraud. These improvements make them safer and more appealing for insurers. The executive order signed by President Trump does not legalize marijuana nationwide. It also does not automatically give cannabis businesses access to insurance or banking. Instead, the order focuses on accelerating research into medical marijuana. Its goal is to improve scientific understanding of marijuana's medical benefits and risk. More importantly, the order supports the potential reclassification of marijuana under federal law. For decades, insurers avoided the industry because they feared legal backlash or reputational harm. A federal signal of acceptance changes the tone. It tells insurers that cannabis is no longer viewed as an outlaw industry, but as a legitimate medical sector deserving of professional support. Over time, this could encourage more traditional insurance carriers to enter the market. Increased competition usually leads to better coverage options and lower prices. The financial environment
may become safer and more transparent. Medical research may expand, stigma may continue to fade, and consumers may benefit from the better regulated products and safer business practices. This moment could mark the beginning of a new era in which cannabis is treated like any other regulated industry. Even though home growers are not growing commercial operations, they still benefit from this shift. As insurance companies become more comfortable with cannabis, they are also more likely to offer affordable personal leverage coverage for things like grow room equipment, small scale cultivation setups, and property protection. Today, many homeowners' insurance policies refuse to cover grow equipment or damage caused by indoor cultivation because cannabis is federally illegal. Rescheduling makes it easier for insurers to treat home grows like any other hobby that uses electrical equipment, water, and specialized tools. The cannabis industry has spent years operating in a gray zone, legal at the state level, illegal at the federal level, and risky in the eyes of insurers and banks. This executive order does not erase those challenges overnight, but it opens the door to change. By fast tracking research and supporting rescheduling, the federal government is signaling a shift that could reshape the cannabis insurance market. For businesses, insurers, and investors, this is a development worth watching closely. We hope you found today's video educational. Don't forget to subscribe, like, comment, and share to stay updated on our latest content. For more exciting insights, be sure to check out our brother channel at WWP Logistics. See you in the next video.